Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we're looking at McCormick and Company. This is MKC as the ticker symbol. We're going to see if the stock deserves to be around $70. We're going to run my stock price calculation projection to see if the trend is up or down. And then we're also going to back that up and see if institutions are buying or selling. So without further ado, let's jump on in. I'm going to go ahead and load the institutional data here while we continue our review. So we're going to look for bullish and bearish targets for the stock. It is earnings. Ooh, it's on a definitely looks like a continued downtrend. Wowzers. Okay. Um, we'll just keep it right there as our resistance. We do have a nice support right, gosh, right there. Okay, so our first downside target, if McCormick and Company does not do well during earnings, we're looking for 62.25. However, if earnings are good for McCormick, we're going to actually refine here because it looks like this company is not very volatile, meaning the stock stays pretty flat overall over time. I mean, the stock is the same price as it was back in 2019. Has the company improved since 2019? In this case, I'm guessing yes. We're gonna find out. Um, but I mean, imagine buying this in 2019 and it's basically flat. The one caveat is I'm guessing they do a dividend, which means you're basically getting paid to hold the stock, income, etc. So if the stock does well on earnings, the stock could go from 68 to 74.55. So we have our bullish target of 74.55 if earnings are good, guidance, whatever. Earnings are bad, we could see this get to 62.25, maybe lower. Okay, and looking at our metrics or our technicals on the monthly, the RSI actually looks like it's with the bears and it's going down. Um, our momentum did not flip to the upside, potentially more downside here. Again, that's bearish. Money flow is downward at the moment. I don't know if it'll reverse back up or down, but I mean, looking at it as of right now, it's down. That's bearish. And our relative momentum looks like it has curled off the depths of the ocean down here and is basically flat. Um, we need to see this move up, which would also be indicative that our moving average has flipped to the upside as well. I think it still might be trying to find its base before reversing. We're, just speculating. They do offer a dividend. Okay, so that was right. This company is a little expensive currently, but in the future it gets less expensive. Quick ratio is a 0.3. That is a red flag. If they close their doors tomorrow, they would not have enough money to pay off debts, liabilities, notes. That's pretty crazy. This company's been around for a long time, I believe. Um, they're profitable. Gross margins of 37%. That is fantastic. That is fantastic. That's huge. Sales up and to the right, beautiful. 666, number of the beast. Shares outstanding is pretty flat. EPS actually looks like it's going down. 2019, 2.62. 2023, 2.52. I mean, basically flat for the past 4+ years. Let's go ahead and run my calculation here. So they have 18 billion, 410 million in market cap, crazy. Plus 707 million in income, 500,000. And they do 6 billion, 700 million in sales. Good for them. All right. Gonna go down to our cash and debt on the quarterly balance sheet. All right, they have 176 million in cash plus 176 778 million. Total debt, I'm guessing it's not that bad. 3,329,100,000. Okay. Total assets 12.8 billion, total liabilities 7.6 billion. That is a buffer of 5.258 billion. $5.28 billion. Not bad. Okay, sold 80,000, got 80,000. Catherine Jenkins. Catherine Jenkins. I'm not seeing any red flags. I just come down here to see if the CEO's swing trading the stock. He's not, or she. I don't know who the CEO is. Okay, now we're going to take this and we're going to divide it by 251,260,000. Okay. And just a heads up, this calculation is more for companies that don't offer dividends, because with dividends, the company has given away their cash, which we're accounting for the cash here, but we're not accounting for it going away. So our price target's going to be high, and it comes out to $90.21. Stock is currently 60. Analysts have it at 76, 78. B of A had it at 100 last year. HSBC 86. So, I mean, I don't think my price target is horrible, but I think it goes to show that its stock is potentially undervalued. Institutions own 82%. That is old data. I'm going to guess that it's higher now. I'm going to say they probably own 85+%. And that's only because the company, I mean, look where it was at in 2019. 2019, they did 5.3 billion in sales. Now they're over 6 billion. Come on. So I'm guessing institutions own more than 82%. Drum roll, please. They own 90%. Again, they've added, and it looks like it's the most they've had since 2021. So not bad. I'm just gonna see what the big boys and girls doing. Fundsmith decreased a little bit. Vanguard increased a little bit. State Farm decreased a smidge to 20,000 shares. State Street added about 5%. Lawrence Eric Curzius added about 300,000 shares. So interesting. This company is in the S&P 500. So if you want some exposure to this, you could buy the S&P 500. It's going to have this stock within it. If you own this one individually, maybe wait, just see how it's going. My concerns here, number one, quick ratio, red flag, number one. EPS, also kind of a red flag. Yeah, I think that's mainly it, really. So if you made it this far, consider subscribing. Thank you so much for watching. If you're in this one, good luck. Have a great day. Adios.